You can support this podcast for $3 a month at patreon.com/copytradersclub, or find me on eToro, username Gavin Macaulay, and add me to a watch list for future content. Thanks for listening. Copy Traders Club, where you can learn how to make better decisions and more money copy trading. I'm Gavin Macaulay, my name and username on eToro. Today we have a roundtable chinwag with 3 PIs who all have one thing in common. Here we go. Season 3, Episode 6 of the Copy Traders Club podcast, and as always, my aim as an eToro enthusiast is to demystify this new and uncharted world of copy trading. Understand what are the pitfalls and best practices, and how ultimately to succeed as a copy trader. So here we are for the first total eToro episode of Season 3, where I sit with 3 of eToro's finest and pick apart some of the issues of the day. Gracing us with their presence today, we have Brentford FC's highest profile fan. He's had more successful big bets than Ivan Toney. It's Bees84. Stephen Budgeon. Hello, Stephen.
Hi, Gavin. Thank you very much for inviting me on again, and hello to the rest of the panel.
Next up, keeping the Irish flag flying, as it does, over the Copy Traders Clubhouse, we say hello to Housewife's favourite, Markod89. Mark O'Donnell. How's it going? How are things back in the old country?
All good, thanks Gavin. Thanks for having us on again and looking forward to the conversation today.
And after our recent visit, we welcome back Black Star PI from the Lion City of Singapore. The main man comes roaring back. FundManagerZech, Zechariah Bin Sheng. What up, Zech?
Hi Gavin, thanks for having me back.
Delighted to have you all back, as you're all previous guests on the show. And today we're going to discuss multiple issues. The episode is split up into 3 parts. Part 1, market discussion. Part 2, Quo Vadis crypto. And Part 3, eToro chatter. Part 1. Let's have a general discussion on the market and where we are. Well, we're still living in the Fed's world, so perhaps we should break it up into, firstly, interest rate hikes. Where, when, how does it all end? It seems to me a few weeks ago there were many voices saying that the Fed rate hikes were pretty much coming to an end. Since then, sentiment has shifted somewhat, and the market appears to be pricing in at least the possibility that the next rate hike could be as much as 50%. Would you agree with that, Stephen? Where do you think this is headed?
Yes. So over the last month or so, it's been the sentiment in the market has been that there's going to be more interest rate hikes. And that is mainly because inflation has been coming down, but the pace of inflation reducing has slowed down somewhat. And that's mainly because of the very low unemployment rate at the moment. And also the spending has been above expectations. So I'm expecting, as a base case scenario, I think that we will only rise by 0.25% at the next Fed meeting. But I think we're likely to have up to 3 more rate hikes. And I think that it's quite likely that those rate hikes will probably end mid-2023. And I think it will probably end at around 5.5%. So that would be about 1% higher than we are today. And then I think that the markets could rally just by them not increasing interest rates any further, by them halting those interest rate rises. I don't think they necessarily need to go down for the market to rally. So I think we have a couple of interest rate rises ahead, but I think the Fed is likely to take that more gradually at a 0.25 increase each time.
From my perspective, while I won't predict where the market might end up or where interest rates might end up, I think there's just a lot of conflicting factors at play at the moment in the markets. So naturally, we've got very, very low unemployment. I think it's record unemployment in the US at the moment. What we've seen there, even yesterday, there was really good figures from the services industry in the US, which gave us that bounce in the market, while also being at an all-time, or not an all-time high, but a recent time high for interest rates. I think with also the behavior of certain spending, I think where we're seeing the middle class being really squeezed, I think the more affluent class are still spending money on high luxury end goods, and ultimately still keeping, those luxury brands afloat. So what I would look at is many of these factors, and judging them all, I feel that it's quite hard to understand where we're going to end up, but we should absolutely be prepared for more interest rates hike, but also from our own, I suppose, activity as investors, where ultimately the companies of tomorrow are going to be building that value and where they're undervalued right now. So it's a little bit of a broader answer. I generally look at things on a much longer basis, but judging when a particular recession may or may not happen, I think it's still quite hard to understand when that might be. But I think we need to be prepared for either outcome. So that's how I'm looking at the market at the moment.
Well, it sounds to me like there's still a fair amount of cash floating around in Ireland, especially for things like home improvements, as your neighbours are proving right now, Mark. So if you heard a little bit of drilling and tapping going on, that's because the mansion next door is being expanded.
They have told me that it's not on credit, which is good. That's a good sign of savings being done. So that's one interesting factor to bake in there.
Zach, we spoke recently about your market outlook a few weeks ago. We concluded that we had no idea what was going to happen. But on this specific issue of interest rate hikes, where do you stand on the size of the hikes, timing of them, number of them?
I don't think my view has changed. I have no clue. I mean, looking at the yield curve, it's weird, right? Like the 2-year rate is 20 basis points lower than the 1-year rate. So clearly the market's expecting, okay, we're going to hike a little bit more and that's it. That's what the market's pricing in. Is it going to increase by a lot? I don't know, man. Can the economy take more than that? This is something that's kind of new, so I'll just share it now, and it kind of leads on to the second point. I think we enter this like 2-speed economy, which is interesting because you look at the average Meta employee that was laid off, right? The average salary was like something like $250,000 a year. So that's pretty decent, high income. And then if you look at the lower end of the economy, you can see that like dishwashers have suddenly got a 2x, 3x increase in their hourly rate. Previously, they're being paid like $10, $12 an hour. And now for $30 an hour, you can barely find people to do it. So it's kind of an interesting dynamic. You see the low end kind of moving up and the high end kind of coming down. Will there be a recession? I don't know. It's like, so the household balance sheets look so good. It's cool. The housing market is cooled off because of the interest rates. But if you look at January, it looks like it dropped slightly to like 6.1, and then the housing starts like increased again. So I mean, I don't know. Like, can the economy take much more interest rate hikes? I don't know. And will the Fed back off and say, okay, we're going to have a recession, let's chill? I really don't know.
I think the markets have held up a lot better than I was expecting them to do. And I think that's mainly because I think that there was a lot of, after COVID, I think a lot of people saved a lot of money over the COVID period. And I think that they have been using their savings in the economy. And I think that those saving rates are now starting to dwindle and credit card debt starting to get higher. So I think it's going to be a tougher environment over the next couple of months. But I think the economy's actually held up a lot better than was expected. And I think most of the economists are saying now that there is a lower probability than they previously thought of a hard landing. Doesn't mean it won't happen, but the probability from them is that it's a lower chance of occurring.
I think one of the main differences between the current scenario and we'll say 2007, 2008 is that one of the main accelerators of the crash was the domestic property market, where at that stage the figure was something about 70% of new homes were on dodgy mortgages, whereas the moment one of the figures from Ireland anyways, and I know this can vary from country to country, but it's about 30% of homes being bought or the homes owned are actually mortgage backed. So like a majority of those homes are actually owned outright. So when we look at the real estate market, the acceleration is likely not to come from households in that scenario. There's also the discussion on where commercial real estate lies at the moment. I think a lot of commercial real estate is having to be repurposed with the current way that people like to work remotely, etc. I think that's an unknown factor right now and how that might impact or accelerate the current trends that we're looking at the moment. So it's a little bit different to 2007, 2008, but it's something that we should certainly look at and be mindful of.
Okay, going back to interest rates for a moment. Zach, you mentioned whether you're not sure how well the economy can take continued rate hikes. But can we not talk about lag for a second? I hear a lot of people talking about that it takes such a long time for the Fed's rate hiking to filter through into current economic data. They often say 9 to 12 months, meaning the effects of even the first of a series of historically dramatic rate hikes is only now beginning to filter through into the real economic data. What's your view on that, Zach?
No, I mean, it's an interesting point. But I think markets tend to be leading indicator. So if you think about like where stock prices are, I agree with Stephen. They should not be this high. If you think about the 1 year risk-free rate being like 5%, and everything else is returning less than 5%. Why is the stock market still valued at these levels, even though those interest rates are clearly already baked in? Yeah, maybe the economic data will lag, but markets tend to be leading indicators. So that's an interesting point, but I'm not sure, man. I'm really not sure.
If you look at the inflation data and the amount it lags, I think you need to look at it in a number of areas. So I think the main area of inflation is two areas. I think one of them is energy, and that has naturally come down as the price of oil and natural gas has reduced over the last couple of months. The biggest lagging indicator and one of the highest making up of the CPI reading is actually housing or shelter. And that is the biggest lagging indicator because it takes a while for the interest rates to get into the economy overall. However, it's quite important to note as well that in the US, it's a slightly different housing market to the UK and Europe. And you will see that in the US, a lot of people have already fixed mortgages taken at very low interest rates. And it takes a long time for them to go on for those periods to either end or them to go on to a more flexible rate. So it does take a lot longer for that shelter part to come into the economy. However, we are seeing now that although the prices of real estate has been slowly dropping, we are now seeing there's a lower amount of properties that are above the asking price. So last year, for example, there was a lot of properties that were over the asking price and people were overbidding. That has come down quite a lot. So I'm actually expecting that trend to continue, and maybe over the next couple of months that it will start to improve and that the interest rate rises will have an effect on the housing market. But those are the main two areas. And then obviously food has come down a lot because of fertilizer prices have reduced, and that makes and wheat costs have come down. But the services sector is still pretty tough, as Zech alluded to, because there's a lot of demand for services industries after what happened with COVID and not enough staff to fulfill them.
And so maybe a quick answer from each of you about how you're positioning your portfolio for the months ahead. What's the main thrust behind each of your approaches?
So currently, my medium-term strategy is still being quite defensive. I'm obviously wary about where we're at from a macro perspective. I still think there's just far too many uncertainties at play to really understand where we're going to end up if we look to the end of the year or even into 2024. So what I've been doing recently is investing into like value stocks, the likes of McDonald's, the likes of Berkshire Hathaway, companies that have been around, that they have weathered many recessions in the past and many downturns. They produce a dividend. Generally, they would be seen as being less risky due to their intrinsic value and their cash flow. So what my strategy looks at the moment is certainly getting into more positions in some of those already established companies. That kind of makes up most of my portfolio at the moment. At the moment, I do want to also keep an eye on the crypto market. So that is obviously one of the areas that I've had most interest in. I'm wary about overexposing myself right at the moment due to everything that's happening, while also being aware that it is also a good time to look to the future and add to my already large enough positions. What I also have is, it's simple, portfolio management on my side is just having a decent cash balance. So I think I have about a 25% cash balance at the moment, just in case we do dip further in our markets, but also to be able to capitalize on any further positions where we have undervalued stocks that we want to get into for the future.
So my portfolio, what I've been doing over 2023 is I still have some tech stocks within my portfolio, but I've reduced them somewhat in my portfolio. And that is because I think going into a high interest rate environment, I think that a lot of the tech companies could start to struggle, especially over the next few months while those interest rates are continuing to be high. So I am quite bullish at the moment on some commodities. So I have a higher weighting of commodities than usual in my portfolio. So I'm particularly interested in natural gas at the moment. I think the prices have come down significantly, and that is because it was a slightly warmer winter than was expected. So I have a good allocation in natural gas, as well as I expect some of the metals to do extremely well as well. So I'm expecting silver to do very well this year, silver and gold, but I think silver should outperform gold this year. So I'm very bullish as well on silver and also platinum as well, which is used in the automotive industry. So I'm pretty bullish on palladium as well. And as well as Chinese stocks, I have a decent allocation of Chinese stocks in my portfolio. And that is mainly because China is easing, whereas US and Europe are tightening. And I think now that the restrictions are starting to be dropped after COVID-19, I think it's a really good time to be invested in Chinese stocks, although there are some political risks involved in that. But I think COVID-sensitive, particular Chinese stocks will do very well. So I have a couple of plays in my portfolio which are Chinese related. So that is the main makeup of my portfolio at the moment.
I have a lot of cash. I have like 30% cash, some one currency position and stuff. Other than that, I was telling Steven, I don't know what to buy. Like, I'm not gonna go chasing stuff because it's already rallied, like oil and stuff. But other than that, it's not much to buy. It's just waiting on my hands, seeing what pukes out next, and just buy those.
Okay, so before we move away from our general market discussion, there's one other point we're here to to talk about, and that is the FTSE being at an all-time high. How can this be? Can it last? If you just watch the news from afar, like I tend to, about the UK, Brexit disaster, governmental chaos, the UK gilt market wobbles almost causing serious financial crisis, cost of living spiralling out of control, everyone's on strike. Presumably, if you were just watching the news, you'd expect to see that the FTSE 100 had dropped significantly in the last 6 months. But in fact, the opposite is true. The October low was about 6,800, and it's currently just below 8,000. Incredible run-up since then. Who can explain what's going on with the UK market?
Well, I think you need, if you look at the UK market, I think it's hard to visualize because, as you said, Gavin, you can see what's going on in the economy. Everything's very tough, strikes, etc. But I think the main thing about why the UK market is doing well and why the FTSE is doing well is the makeup of the FTSE 100. Okay, so the FTSE 100 is made up mainly of energy companies, as well as miners and financial services. They make up the majority of the FTSE 100. So the miners are doing a lot better this year, which is helping the FTSE 100 to go up. Energy costs have gone down, but they're still pretty high on an historic level. And financial services benefits from a higher interest rate environment. So a higher weighting of financial services companies means that it's more probable that the financial services companies in the FTSE 100 would be performing quite well. So I think it's mainly to do with the makeup of the FTSE 100 rather than the specific economy. I don't have the numbers in front of me, but I think if they stripped out financial services and stripped out energy, I think it would paint a completely different story.
Well, thank you for that wonderful explanation there, Stephen. And now let's move on to a subject that you're all familiar with. That is crypto.
Do you copy?
Do you copy?
Do you copy?
Do you copy?
Copy Traders Club.
Copy Traders Club.
Do you copy?
Do you copy?
Do you copy?
Do you copy?
Copy Traders Club.
Copy Traders Club.
What are we going to discuss about the crypto market? Is there worse to come in 2023? Or is now the time to buy? Are projects dying? Exciting ones being born? What's the general sentiment in the industry? Zach, do you want to kick this conversation off?
Yeah, sure. In my full-time job, I work at a crypto fund, and most of the stuff we're looking at now is really just bankruptcies, to be honest. Like, we're not seeing that much volume back in the market. Market makers aren't really coming back in the same kind of speed and same kind of volume. Lending market is kind of quiet. It's better to be in TradFi than DeFi right now for the lending market, so interest rates are low. So that's a problem. And, we were just talking about it just before we started recording. Like, Silvergate is one of those things that just was collapsing this week, right? And I was looking at it yesterday. It's like $183 million market cap, down from like $1 billion. So it's pretty significant if Silvergate goes down. So despite FTX, despite Celsius, Voyager, DCG, Silvergate, and everything that's gone on, Bitcoin is still at 23,000. Or 22,000. How is that possible? I have no idea. It's insane to think that, but I think just all the sellers have kind of just disappeared. Like, people don't realize what happens in falling markets. It's just people stop selling. That's kind of all there is. But yeah, so is it going to get worse? I'm not sure. Is it going to get better in like 10 years? I mean, I'm sure the answer from all of us is yes. It's definitely going to be like better. But where do we go in the next 6 months? I think it's just going to be consolidation for a very long time. And I think crypto is going to be a bit stuck for a while. Well, it'll be interesting to see, but I think we're going to be here for a while.
Yeah, it's interesting to see the impact, of all the recent events, obviously with Silvergate, where, you know, in the past, if it was closer to the start of the bear market, that impact would have been huge, and on the price in particular and the sentiment in the market. What I do find is, as we get closer to the lowest range of the cycle, bad news doesn't have as much impact on the price as it would earlier on. So take what you may with that. I still think when we look at Bitcoin in particular, it's very, very cyclical in its way, that it's sort of following its 4-year cycle, as it always sort of has been, to a rough extent. So, you know, taking the long-term view of it, I think we're at a stage where, you know, we're likely to go through accumulation for, you know, the next possibly year to 2 years, where we could, you know, explore the high 20s into the 30s. But I still think that unless there's any significant liquidity events or any really, really massive trends in the market that really come to the fore or get legitimized, I think it's going to be very much still in the range. So, like, touching on the point that Zech made, I think we're still going to be an accumulation point for the next while. There's still a possibility we'll kind of test the lows again. But the way that I'm going about it, and the way that I communicate to my copiers, is we just need to be prepared in the likelihood that may happen. But ultimately, looking at the long term, you know, we can take as much as we can from the events that happen, but ultimately long term, you know, we want to really understand what's driving the price. So that's how I'm looking at the moment.
I saw another crypto PI on eToro boldly declaring that the days of sub 20,000 were now officially over.
Is it a perma bull?
My views at the moment on the crypto market, I think it's important to differentiate between the long term and the short term. I think in the long term, I think we're following a very similar 4-year cycle to what we had in Bitcoin at the last cycle. And we're following very closely to what happened in 2019. The bottom was in at the very beginning of the year, and then it started to see a rise up and before a slight dip in the price after that. And I think with the halving that's happening, the Bitcoin halving, which happens every 4 years, and that's happening in May 2024, I think that when there is going to be a supply shock come on board, I think the chances of a higher Bitcoin price are more highly probable. But I agree that it's likely to be in a consolidation zone for the next, at least the next 6 months. But I think it's going to be a wider range than we had previously. So to cut a long story short, I don't think we're going to hit all-time highs in 2023, but I think we might have a much bigger range, let's say from 20 to 40, something along those lines. But I don't expect us to get back to all-time highs. But on a shorter term perspective, there are a couple of things that are in play at the moment, which people need to watch out for. And one of those is Mt. Gox. So Mt. Gox is a old Bitcoin exchange that I think went under in about 2012, 2013 time. And what happened is that there was a lot of hacks, and they didn't have enough funds to pay out customers after the hacking, and they went under, and they went into Chapter 11, and they went into bankruptcy. And there's been a legal case for the last several years. And with that legal case, now it's kind of coming to an end. And now that within the next kind of 6 months, there's going to be a release of 147,000 Bitcoin that were on that exchange before it went under. So I think we could see a little bit of selling pressure over the next couple of months as they make their way into the markets. And then the second point, which there could be some selling pressure as well in the short term, is the Ethereum Shanghai update. A lot of people will know that Ethereum went from proof of work to proof of stake a few months ago. And what that gave an opportunity for anyone with over 32 Ethereum to be able to stake those and run a validator. And what's happening now in the next couple of weeks is that those people are going to be able to withdraw those Ethereum for the first time in 2 years. So I think that there could be a lot of selling pressure. However, that could work its way into other projects in the ecosystem as there's more locked up liquidity that could come into other altcoin projects. So long term, I'm bullish. Short term, I think that it could be some selling pressure.
Well, I think one of the things that it's very obvious is regulators are coming down like extremely hard on crypto as well. Like, I think it's kind of unprecedented when you look at how BUSD Paxos got hit, and they're saying stuff about Coinbase, about staking and stuff, and Kraken. So all that is coming to light. Like, now regulators are like, okay, crypto needs to be managed, and that's going to affect the growth and path forward. Because I'm sure a lot of DeFi opportunities are also gonna face a little bit of scrutiny. Off-ramp, on-ramps are gonna be more difficult now with a travel rule, which means that if you want to transfer crypto from one person to the other, you must know who the other person is and send the details and stuff like that. So there's a lot of regulations coming into the industry, and all that is going to be quite stifling for crypto. Yeah, I'll be interested to see how it grows from here. Definitely, like regulation tools like Chainalysis, that does on-chain analytics about where there's been in the dark web and stuff like that. It's gonna become a bit more prevalent. But it does make it crypto a bit more difficult. I mean, we still have innovation. Like, I think we just released a new token standard this week, which will allow people to use hardware wallets. ERC 433-7. So that's just released, and that's super interesting, right? Because now you allow like gaming tokens to not keep signing, which is a problem with that people previously complained about. But I don't think it'll help. To be honest with you, I don't think it'll help. Using crypto for gaming has been around for the longest time. Mt. Gox actually stands for Magic the Gathering Online Exchange. So we've been using it for gaming for the longest time, but it's not easy. It's not fluid. And let's be honest, if you have the means to do it, you would build your own marketplace. You wouldn't depend on the decentralized version of it. So I don't know. I'm not very positive on the gaming sector, but we'll see.
Yeah, on Zech's point, I think that there is a lot of regulatory scrutiny. And I think that could be seen in a couple of different ways. So right now, the SEC are basically saying that everything except for Bitcoin is potentially a security, right? So that going into the sentiment is obviously very negative. I don't think he really has legal precedence to say that yet. But if we look at it, I think it could be also a positive, because if you actually look at it, it might actually drive people into using really decentralized services like such as DeFi, rather than using centralized services such as exchanges and staking, etc., on those exchanges. So we could see money moving from those type of centralized services to decentralized services. So it could do very well for those decentralized services as well. I'm also very positive. I'm actually very positive on the GameFi, which is gaming tokens. And that is because I can see that there's a lot of demand for people playing games. But what I would much prefer to see is to see good quality games being made with tokenomics on the back end to support that, not with the tokenomics at the front end and a poor quality game. So I think as long as they can keep the quality of the games up and build good tokenomics behind them, I see a very strong potential future GameFi market as well as DeFi.
So I'm wondering, how does this all filter through to your activity on eToro when it comes to crypto? Are you keeping your powder dry for now? Are you trying to pick up some altcoins which have been hammered in price? Are you sticking to Bitcoin and Ethereum? Just quickly, each of you, can you us a little idea of your crypto approach as a PI on eToro right now?
Yeah, so at the moment, my strategy is still quite defensive on crypto. There is the opportunity for long-term positions naturally within the coming year or thereabouts. So I will always look to accumulate my long-term coins on those timeframes. For me, my main stakes in crypto is Bitcoin and Ethereum. They will make up majority of my allocation. And then what I'll do is I'll have some selected altcoins, generally, the slightly larger, more established altcoins that have interesting projects and use cases behind them. And I'll always have a reason to why I'm investing in these. So, altcoins like Solana is one of the big ones for me, Matic and EOS, or like these type of altcoins are ones that I've current positions in and I will add to, particularly the ones that I see a lot of potential in. But it's mainly Bitcoin and Ethereum for the moment, and I will add to those positions over time.
For me, it's really just the layer. I'm looking at the layer one, so I have Ethereum, I have BNB. I think if it doesn't double, I'm not going to touch it. Like if I don't see a potential of the position like doubling, I won't touch it. So I'm sure crypto will double at some point. So I'm just getting some layer ones. Matic is an interesting one for me because their business development is just outstanding, right? They gone to the Disney Accelerator, and I think that's a big deal. Like if Disney like takes Matic and does something, I think that's going to be a very big deal. And so I'm long Matic. I really like Matic. Then I have my layer twos, which is Matic and Shiba Inu. I really like Shiba Inu because I'm an asshole who likes to build stuff for fun. So I can think of no better platform to build meme stuff than Shiba Inu. And other than that, I have some Aave. Aave, I think, is just a protocol. I needed a protocol, something to add. I didn't really like Curve, so Aave seems to make the most sense for me. So that's kind of where I'm positioning. Layer ones, layer twos, and some protocols, but not really into GameFi, unfortunately. Oh, and no non-EVM. So sorry, I don't like Solana. It's too hard to build.
What I tend to do is I tend to always have crypto positions within my portfolio. But when I start to see things are heating up at the top of close to the top of the bull markets, I will trim my position allocation. And then during the depths of the bear market, I will increase my crypto allocation on interesting projects because the asymmetric upside is much higher when prices are lower. So I also have Bitcoin and Ethereum at the top end of my portfolio, but I'm very bullish as well on Hashgraph, HBAR. There's a lot of amazing things that's going on. There's a lot of huge companies within the Hashgraph Foundation as well. So I think that's going to be really large. So that's, again, one of my large positions. I'm also very bullish on DeFi. As I mentioned earlier, I think a lot of things will shift to decentralized finance, away from centralized finance. So again, I have a position in Aave as well. As I said, I'm also bullish on GameFi, and I have a position in Gala, which I prefer in GameFi to have a position in a studio rather than a specific game, because you're never quite sure what game is going to actually take off in the GameFi industry. So I prefer to invest in a studio and a ecosystem of Gala, which are making lots of different games. And I think the high probability of success is much more when you go for a studio rather than a specific game token. So those are my main crypto positions. But again, I will continue as a cycle to go. I will trim up or trim down depending on where we are in the risk curve.
Well, it sounds to me like you're all very much keeping the faith in the crypto sphere, albeit with a few caveats. It's interesting to hear. And one thing we're all involved in is eToro, of course, eToro itself. So that gets us on to the third part of today's chat. And we're just going to talk through various elements of the eToro platform. I'm going to kick it off with the change that was made to notifications. Previously, I was following umpteen users on eToro, popular investors, in various different brackets, different categorizations that I'd done throughout my watch lists. But then suddenly they're now giving you a notification every time everyone does a post. So I had to go in and delete 99.9% of them. And even still, even though I've got a small number of people on watch lists, I still find the notifications quite annoying, and I don't read most of them. Do you think that was a good move, or was it a crazy move? Does it weaken the notification of eToro?
I would be on the fence as well. I think it's certainly good for, for exposing, content to your watch list or to people who have you on the watch list. It's a good way of doing that. But I think there's certain people who might, post multiple times a day. So I can see where people will get quite annoyed with that, potentially unfollowing or taking them off a watch list. There's that side. I think it should be iterated upon. I think there's more sophistication probably needed in the newsfeed. From the back end, I think, like we see on like LinkedIn, we'll use as an example, we can customize what notifications we get very, very sophisticatedly. I think eToro probably needs to take some feedback on that, because, in the past, it was always a good feature, but I do think they need to refine it and make it a bit more user friendly, but also kind of serve what they really want to, like, much better than what it is. So I'd be on the fence, to be honest.
One point is that it was a good feature for eToro to get their message out. If they wanted to tell people something, they'd ping a notification, you'd see it, you'd read it. Now it's lost in a sea of notifications. So I kind of feel they've sort of weakened one of their best communication tools with their user base. Anyone disagree?
Yes, I think that they could have weakened it slightly. I personally would like to see a opt-in type of box involved in this. So I think if you had a particular watch list, you could opt in or opt out of receiving notifications from people within that watch list. So you didn't need to do it, or you could do it individually for each one, but many people probably have a lot of people in their watch list. So I think an opt-in, opt-out tool would be better. And I do think that it may have weakened the newsfeed slightly, because it brings less importance to the newsfeed, because a lot of people get them within the notifications, and they don't necessarily have time to look at them at that specific time when they receive the notification. And then later they could forget it. So, and I think it does benefit those that have more people on their watch lists than others with lower amount of people on their watch lists, because obviously more notifications will get sent out to people with a higher amount on the watch list. So yeah, I think there's definitely limitations to it, but I can see what eToro is trying to do. They want to get the message out to a lot more people and get updates from their individual PIs. But copiers already did get notifications when you're copying them, and they post, and your popular investor posts a post. So that was in place anyway.
I think I would just add just one quick one before we move on. I think that it would be a good option from the person who's posting the update to be able to select if they want it to go to the notification area. Because I think if people want to do multiple updates, I know certain PIs, will update multiple times a day and talk about each of the positions that they are opening or closing. I think that there's more weight if, we'll say, for instance, you do your video update of a week and you want your network to know about that. I think there's a lot of weight then in being selective of what you want the rest of your network to understand or to be notified on. So it would be nice, maybe feature to be able to tailor your outreach from the PI's perspective, or from the person who's sharing the actual content's perspective.
Yeah. And of course, you could take that further, and that every PI's post, you have a certain categorization checkboxes. So you tick what type of post it is, and then people decide what type of post they want to see from that person. That's the opt-in. So if you only want to see monthly or quarterly updates, you only want to get notifications on those, that's what you get, not, I bought and sold something.
Yeah.
Okay, Zach, you have any thoughts on this? And after you've given us your thoughts, can you introduce what you wanted to talk about when it comes to the new charts on eToro as the next point?
Yeah, sure. I mean, I don't have anything to add about notifications. I think you guys covered most of it. I do agree with Gavin's suggestion. I think that would be a good idea if they can kind of choose what they get updated about. So that'll be interesting. The one I want to talk about is the new charts. I'm loving it. Finally, we have trading view level charting on eToro. I think that's amazing. It's such a great plugin. I'm sure it's not cheap for eToro, but I think it's fantastic.
When did that come out? Just very recently?
I have no idea. Anyone have any idea?
I think it was about a month ago, or about a month and a half ago, I think.
And walk us through it, Zach. Talk us through the feature. Are you on it now?
Yeah, I'm looking at it now. So I think a lot of us are very familiar with TradingView. I think some of us even pay for the premium subscription for TradingView. It's just a very easy to use interface with a bunch of indicators. I'm not sure, can you add custom indicators? I don't think you can.
Going to be a lot of mouse clicks here for the listener to enjoy.
Yeah, sorry, that's me. Yeah, no, they don't have the custom indicators, but the basic features are there, and I think that's awesome. It's just an easy to use interface with a bunch of shortcuts and stuff. So it's just easy to use. It looks pretty perfect.
I think one of the features that I really like, and I don't know if the other panel will agree with me, but I really like the new page about earnings and dividends with the calendar, the economic calendar. I think that's a really great new feature that eToro have put in because it really allows me to be able to see straight away when the earnings calls are going to be, and also to see when is the ex-dividend dates, and also when are those dividends going to be paid out as well. So I think that's a really great feature that adds a lot of benefit to not only PIs, but also regular eToro users.
Are you equally excited about the Delta app? Explore NFTs, get advanced insights for your eToro portfolio, connect your Web3 wallets all in one secure place.
I used that once and then never again. So that's my feedback. I didn't spend enough time looking at it, but I used it once and I didn't really find much value with it.
I haven't looked at it, so I don't know, but it leads with NFTs, which is why I stopped looking at it. How about your thoughts on the general atmosphere on eToro at the moment? What's anyone's take on general sentiment among copiers at the moment? You think they're feeling pretty low about things? They lost a lot of interest? They're not participating as much on the platform? When will they come back? Is it only when the times are good that everyone wants to be involved?
What I'm seeing at the moment is generally less engagement and less, I suppose, people, in the market naturally, because we're at a stage where we're going through a lot of uncertainty. And people obviously get a dopamine hit when they close a trade at 20 or 30% in a week. And it's just not possible at the moment unless you're lucky and unless you're using a lot of leverage, which is definitely not a majority of the people on the platform. I think that particularly from my own perspective, my copier and follower growth has remained pretty flat at the moment. There's probably more I can do on my end, but I think in general, I definitely see a lot less engagement, and I'm not sure what the antidote to that is, but I do think that the market sentiment, is a big factor there for the common like trader or the common investor.
I agree with the sentiment that Mark brought up. I think people come back to the eToro platform when it's a bull market. Like when they hear, FOMO is a real thing. It's always going to happen. So I think the period of post-COVID where people are stuck at home with nothing to do forced them to kind of look at markets, increase that speculative bubble. So a lot of retails came into the platform, and that was a very, very exciting time for eToro. Now that's kind of gone away. I think a lot of people have been burnt. I definitely know that to be true. I had like interns coming in to tell me how to trade. So definitely speculation was abound. But yeah, we'll see. It's going to be interesting to see how eToro takes it from here to try and expand that market, and how they're going to reach out to the retail who may feel a bit jaded right now.
I think it's very similar to if anyone's seen the market psychology graphic that always is shown when talking about the markets. It's quite the same when we look at eToro as well. So I think at the top of the market, there's a lot of excitement. There's a lot of new speculators, generally beginners, towards the top of all cycles. And they get very excited. They invest. And then when the markets go down, they are kind of the weakest hands, are the most likely to either stop the copy or leave their eToro accounts dormant and not trade anymore. And I think what happens as the cycle progresses is that a lot of those people leave the platform, and you're then left with a really kind of hardcore people that are really interested in the market long term. The speculators have been a little bit weeded out of it. And I think what we're seeing at the moment is that I think that most of the people that would have left because the markets have been down. And those are left now are generally longer term investors who are following a good strategy. However, I feel like at the moment, because we had a good start to 2023, it's come down a little bit over the last couple of weeks, but I think people are a little bit jaded at the moment. They're not planning to pull out the money now, and that they're in it for the long term, but they're kind of just keeping a glance at their portfolio from afar, and they're not communicating much on the news feeds. There's slightly less comments on posts, etc. And I think that's kind of natural. But I expect as markets to pick up, there'll be more communication. But I think people there are now there for the long term in the majority.
It's also important, is it not, for PIs to continue to do the work and for them not to check out and abandon their interest in their portfolio and interest in their own copiers? I'm sure you'd all agree with that. I assume that's something we've all seen to a greater or lesser extent on the platform. Copiers' interest may come and go, but as popular investors, I imagine you would all agree you need to maintain certain standards of involvement across the board.
Honestly, I have a system, so I don't add or deduct during bull markets or bear markets. It's just the same system. Update once a week, I check it once a week, and that's kind of it. Yeah, but it does help, I think, to a lot of copiers especially. They want to know that you're active and you're looking after their portfolio. If you go ghost them for like a month and then come back just to meet the minimum requirements, I don't think it's very nice. But yeah, I don't know what the rest of everyone else thinks.
Yeah, I think there's a level of responsibility as well as, as a custodian of people's money. Obviously that varies depending on what stage of a PI you're at. However, I think that it's so important when the time is bad or when the markets are down, so important to keep that communication going, because, in most cases, like people may have lost money in their mind, or they don't see any way out. So I think as someone who they follow or they look to, it's important to kind of reassure them that, it's not all going to be bad, but that there's something in the background that you're doing your best to look after their funds and to help them see the bad times out and ultimately give them confidence for the future. So I think there's a responsibility there on the PI's shoulders for sure.
Yeah. And my viewpoint is really to stay consistent. So I want to stay consistent and as approachable as I can, whether it's sunny outside or whether it's very rainy. So I think it's important to always update copiers. I think we have a responsibility. And I think that copiers are also very smart. They know if they're being ghosted, and they know if that a popular investor hasn't provided them updates on a regular basis. So I think that over the long term, they will appreciate a more consistent response and being able to reach out to the popular investor when they ever have any questions. So consistency, I think, is the key.
So there you have it, the approachable investor remaining consistently approachable. And I think that consistency is true whether you have 12,000 copiers like Zech or 12 like me or anywhere in between.
Yeah, Zech, you can share some of those out, by the way.
I wouldn't know how to do that, syndicate it out.
All right, gentlemen, thank you very much for your time. I think we'll leave it there. So to each of you, thank you very much for joining us. Mark.
Thank you very much, guys. Much appreciated.
Thank you, the approachable investor, Stephen.
Thanks very much for inviting me on. Really great discussion, guys.
And thanks again, as always, Zech.
Always fun, Gavin.
And thank you, listener, for being with us here today. Many thanks to those three wise gentlemen for their involvement today. These are tricky and strange times in the capital markets. It strikes me that anyone who is certain what 2023 will look like has absolutely no idea what's going on. That's all from me. See you on Discord and Facebook, although I'm never on Facebook. Until next time we meet at Copy Traders Club, I wish you many happy returns. Obviously, anything you hear in this podcast is for entertainment only, not financial advice. Do your own research. This is just generic chit chat. We don't know your individual circumstances, etc., etc., and so forth.